Hello traders, hello everyone, my name is Gregor Horat and welcome to our new episode Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the euro against Swiss franc, S&P 500, euro pound, crude oil and dollar CAD. Now firstly let's take a look on euro dollar. As you know, ECB announced that they will hike in the next meetings. However, they had an emergency meeting yesterday where they announced that they will support other in-depth countries by buying their bonds. So actually what this means is somehow, because as you know we are split in different countries in the eurozone, and not everywhere is the same economic situation as at the moment, so definitely ECB is doing something to protect their other economies that are not so strong, or those countries that are in debt, like in Italy. So this is something that is putting some bearish pressure on the euro dollar. From an Elliott wave perspective, I still think that this market can be headed even for parity, and then maybe they will start talking more aggressively about the stability of the euro currency. I mean, they surely should do some price stability because we know that weak currency, especially if you're a net importer like the eurozone, will have a bad impact on inflation. So if you want to somehow to stop the inflation, then maybe you could also do this by trying to support your own currency. So I think that this could be the case after hitting parity. I think that this is a very strong level. Well, the last time when actually they intervened, I think it was back here. So I think that again, if we see euro just crashing to the downside, inflation will obviously just keep moving higher. So I think that sooner or later ECB will have to be much more aggressive on that. So I think that wave C here could be in final stages. Now wave C is a motive wave, should be made by 5 subwaves, and if you look closely here, it's wave 1, wave 2, wave 3, and looks like that this could be still wave 4, maybe as a flat correction if we suddenly just will see a break maybe below 2017 lows here around 103.20 and then rally into wave C. But overall I think that this weakness still stays in the cards. If we suddenly see a strong and extended drop towards parity, then I think that wave 5 is already in play. Now let's take a look on euro Swiss. Why bring this on? Well, because Swiss National Bank, as you know, today just hiked more than expected. So obviously they are just a few meetings per year. So after latest ECB meeting, they want to follow the ECB policy. They know that they could have their own inflation problem. So if ECB will hike, obviously they will do the same. Like, it's global policy decision actually, so where one central bank follows the others. So what we are seeing at the moment, well, Swiss is getting stronger because CNB is already acting while ECB is still only talking. So I think that for now this trend is still to the downside on euro Swiss, and if you look closely here on a higher degree charts, well, I think that this fifth wave is still missing, and then what we could expect is maybe something similar like back in 2011, 2015, with a potential spike to a new low, and then market could stabilize. So fifth wave still for now, there is room for more weakness. Even potential bottom formation with a wedge could be the ideal scenario. Notice that market rallied recently here with quite an overlapping recovery and now breaking this trendline support. So I think that more weakness here could be in the cards. But as I said, at these lows, we would expect or look for limited weakness, especially if we see also euro dollar moving towards parity at the same time. Now let's take a look also on the S&P 500. Well, Fed hiked 75 basis points, so we have a very exciting week. Everything what could be done in the last 12 months, well, it looks like could be now done in a week. We also have Bank of England, Bank of Japan today as well, so we'll see how this will impact the volatility. But obviously every central banks are trying to follow the US. So the US is first, and then every central bank is trying to follow the same policy. So what we are seeing here on the S&P 500, well, because of hawkish Fed, hawkish expectations, they said that they will do more hikes in the next meetings. Of course, US dollar is moving, US yields are moving higher, US dollar is also still strong, and this makes S&P 500 bearish. So what we are seeing, well, I still think that this could be a very deep complex correction because of the overlapping wave structure. We are now at 3,700 first support. So when this market could rally, well, I'm waiting on price stabilization. I still think that during summer or later, after summer, we could see a price reversing this trend. For now, when I look at the 4-hour chart, well, at the hourly chart, well, I can see price coming down into fifth wave. I can count 5 waves up, 5 waves down now from that wave B swing high. So looks like there is the final fifth wave in play. So first support 3,600 is potential zone from where I would love to see some kind of a reversal. So we'll see if this can happen by the end of the week. Well, it's already Thursday, so who knows. For now the trend is still down, and risk off in play makes dollar strong. So let's take a look now also on the euro pound. As you know, we have Bank of England. We'll see if maybe Bank of England can do another surprise, but they were quite specific regarding the recession risk, so I'm not sure if they will stick with any aggressive talks here. We'll probably trying to defend. So what is the euro pound doing? Well, firstly, the big picture. Well, notice that we had a multi-year support here around 0.83 level. We are reversing very nicely away from it, and more importantly, this came after these 5 waves down here. Okay, we know that after 5 waves down, we can expect market bottoming. Also notice that market is breaking this trend line resistance here, and this rise is coming with 5 waves. It's a leading diagonal, in my opinion, either for a wave 1, maybe for a wave A, so more upside could be seen after pullback. So wave 1, wave 2, wave 3, wave 4, wave 5. So more upside after a 3-wave retracement. Well, looking at the 4-hour chart, we have quite nice looking reversal so far. So it's the first leg of a minimum 3-wave drop. The first support would be at former wave 4 right here at 83.90. So for now, euro pound is sideways. Longer term, I still think that this base is building at March levels. Now let's take a look on crude oil. And now I've been tracking this ending diagonal for a while here in final stages of a wave B. So I was looking for limited upside. It was also a perfect combination with the fib levels. Notice the 78.6% is the final fib level of this retracement. So bears are coming back into play now after breaking this this wedge trendline support. So I'm looking for more weakness, and ideally we will see a 3-wave drop, possibly back towards this trend line. I should make this more precisely. Okay, so it was this trend line has a 3 points. It could be another 4-point retest here around 108, 107 level. So for now, I think that this could see more weakness, but longer term still sideways price action. We could stay trapped in very big range for a while. But if I will be able to count 5 subways, A, B, C, D, and E, then again I will focus for more upside, which in my opinion still can be in play when looking at these longer term charts. Notice that these highs from 2008 are still in place, so at some point I think that the retest and then finally reversal could occur. So for now, as I said, on the short term basis, we could see some weakness, and if that would be the case, well, dollar could get stronger and commodity currencies could see more weakness. And if you look at dollar CAD, well, this certainly appears to be the case. Notice that market is making some nice reversal here. Looks like an impulsive price action here against the previous 3-wave drop. So I'm thinking about more upside after this pullback. Could be even a wave 2 pullback. We will see if market maybe could stabilize here at the previous consolidation phase when there was a downtrend. So this is the potential support here around 128. Watch this level. Also looking at the hourly chart to give you the better perspective. Well, you have these 5 waves up here. Okay, I can clearly define this as an impulse. Okay, even with an extended subdivisions here in the middle. So now this reversal, because it was a very sharp drop from a new high, normally this suggests that we stepped into a correction, and corrections should be made by three waves. So I'm looking this to be a wave A. Now you are in wave B, so watch out for a wave C. Supports here, I can identify them at 128.40, and then, as I said, based on a daily chart, 128 is the level that we should focus on. So I think that after this weakness we could see more upside, especially if crude oil, as I said, we'll see more weakness, because that would make Mexican peso, Canadian dollar, and other commodity currencies that are linked to crude oil were much weaker. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon. Bye.